Hello, happy Monday to everyone. Happy Monday. We are live and we are certainly grateful to share a bit of information with our viewing audience, of course, members of our congregation. But of course, this stream is being broadcast to whoever is online and those who are would like to connect and just gain and glean some information tonight. So we're just excited to bring our home buyers seminar to you. This is, I think, the first time we've done this via stream, and we're just excited as I've been sharing with members of our congregation and those who I kind of bump into that this theme for our year is that of breakthrough and increase. And I feel compelled to share and be and have a platform where we can provide information for persons who are interested in the home buying process and ask some questions if you're online tonight, and if you want to know where to get started, we have a great experienced person who you can engage with tonight. And if it's not for you, you can certainly share maybe with your family, friends, colleagues, those who you may have relationships with. So we're excited about our time together. We don't plan to be on very long, but we want to give you some information and make sure it's impactful. So want to introduce a wonderful lady that I've met a number of years ago while working in the real estate industry, and I have maintained a relationship with her over the years, and we recently reconnected. And I was thinking about who, and this person is the one who the Lord has given us some insights to say, hey, this person is one who can help and provide information to people about the home buying process. So I want to introduce Mrs. Jane Williams, and I will kind of talk a little bit, and then she'll get into some of the specifics. So how are you on this evening, Miss Jane Williams?
I am wonderful, wonderful. I'm so happy to be here. It's just great, and it was so great to reconnect with you. You are always inspiring to me as I follow you, and just it's amazing.
Amen. Well, I thank you so much for those kind sentiments. And again, I'm just glad and grateful that we were able to connect. And I know with your wealth of experience that you are a person of integrity. Again, I know that because I personally worked with her, and she's going to provide some great detail tonight for us to, kind of glean from. So as I said earlier, if you know anyone who is interested in the home buying process, because the market is heating up very quickly, and it is a great time. And one of the things we may get into tonight is, if you're not quite ready yet, it's important to start the process and to at least gain a plan for how to do it. So, we'll talk a little bit more about that as we get into a few of the details on this evening. So, one of the questions I wanted to start with tonight was how long have you personally been in the mortgage lending industry, so people can kind of get an idea of your background?
So I'm kind of embarrassed to say that it's coming up on 39 years. So my story is I'm going to say I started when I was 12 because that's a long time to do one thing. And I literally have really and truly done loan origination the whole time. So
Wow.
I
Wow.
it just means I've helped first time home buyers and their families and their relatives and friends. And really, that's how I've kind of built up business is just that referral network from, you know, making sure that your client was really happy and satisfied with their whole situation and the options. And so it was a long time. So I've seen like ups and downs. And, the funny thing is when people say, what do you think rates are going to do? And I will say, let's all lean in. I'm going to tell you what they're going to do. They're going to change.
Right. Right. Yeah. And that is certainly an important factor for everyone or anyone who's considering purchasing a home, that it is, I think it's a good thing to keep that in mind. But I will also add, and I was listening to another individual, that you look at your purchase as an asset, that you're something that will appreciate in value. And again, that's a bit broad, but I'm just a proponent of ownership. And if a person can put themselves in a position to do that, I certainly encourage that. And of course, I encourage our members, and again, anybody that I have a relationship with. So, but that's great information. So, the next question that I had. So, what are some of the necessary steps for someone to obtain a mortgage? And I know that's a little bit broad, but I'm sure you
No,
can kind of give.
no. I think that one of the things that I like to share is that I really didn't grow up knowing anything about finance. It wasn't something your school taught you. My father passed away when I was 10. So,
Mm,
my mother was in a tough situation. It wasn't like we didn't talk about, no one talked about finances or credit. And so it
mhm,
was really sort of a skill that I had to learn. And, what I like to tell people is we're here to take away the fear of just
mhm,
starting the process of just
mhm,
figuring out, can I buy? And
mhm,
I feel like that's the biggest thing is take away the fear. Don't be scared, because I truly believe that it is not a matter of if you can own your own home, but a matter of when.
mhm,
And I
mhm.
say that knowing that, just as you said, the it's such an asset, but it is also the way to create wealth, and
Yes.
generational wealth is
Yeah.
really, it all starts with owning your first home, owning your own home. And so many people have built wealth based on that alone. So,
Mm,
it's
mhm.
important that, a lot of people didn't have access to it because no one tells you how to start. And
Right.
so it's an important thing to take away the fear and to really figure out, well, if I'm paying my rent on time and I'm comfortable with that and I'm able to save a little money, maybe it's time.
Mhm, mhm, mhm. Yeah, that is a great response. It's a matter of when, and I think
Hmm.
I think it's such now. It's such a great opportunity, even though rates are fluctuating, and
Right.
rates change, but it's still important, I think, to move in the direction of ownership, and that's the thing. Take away the fear. I'm a person of faith. I say, hey, listen, walk by faith, and and then gather some information while you're walking,
Right.
so that
Exactly.
you can make an informed decision, because that's what it's about, making an informed decision about your future, well, about your present, really, and your future. And certainly, I think purchasing a home will definitely affect persons positively. So I think that's really great. So the next question I had: so generally, how long does it take an individual or maybe a family to get qualified for a mortgage?
So the process of qualifying for a mortgage is very quick in the sense that I would take information from someone,
Mhm.
whether it's over the phone or they, jump online and do a quick application with me. That's the scary part. People are afraid to do that. But just starting with that and then looking at your credit history,
Mhm.
that
Mhm.
all starts with credit. You can name all kinds of programs in our Maryland, Virginia, DC area. We have so many different down payment assistance programs and programs that you do not have to save 20% of the sales price to use as down payment. There are
Mhm.
programs you can do with no money down, but all of those programs, all of the options, all start with your credit.
Mhm.
So it's like credit, income, and then assets. But the
Mhm.
credit really is the most important because, an institution is lending you money to buy an asset, but we're going to lend it based on, can you pay the money back?
Mm-hmm.
Have you borrowed money before, whether it's your car payment? And the important thing is we really look for credit history of at least, let's say, 12 months,
Mm-hmm.
and with at least three things that are reporting to the credit bureau. So they might be, so we expect you to pay your rent on time and your utilities on time, because
Mm-hmm.
those don't tend to report unless you didn't pay them.
Right.
But things like a credit card, perhaps a secured credit card or a store card. So if you can establish three things, that's the place to start. Three things and pay them on time.
Mm-hmm.
And we can go into this later, but I could just mention it now. Like, the important way to build that credit is, let's say you feel like you don't have any credit, right? But maybe a couple things went to collection. Maybe, that's the case. Or maybe you had some medical bills and they went to collection. Well, first of all, we don't care about medical collections. And
Mm-hmm.
collections also know that those can be put on your report without anybody proving that you owed anything.
Mm-hmm.
Unlike a judgment, where a judgment, a creditor had to kind of take you to court. So you would usually know about it. You could have collections and not know about it. So
Mm-hmm.
that's why talking with someone to pull your credit, let's make sure things that are on there are correct. They might not be.
Mm-hmm.
And
Mm-hmm.
then again, trying to look for at least three things that you've paid on time. I
Wow.
worked with borrowers that lived almost their whole life. They're 50, 60 years old, never had a house, never had credit, and just told them, in really as short as 60 to 90 days, you could establish credit. You'd be surprised.
Mm-hmm.
And
Now,
so making
yeah,
those payments on time.
yeah, I was going to say, now for the average person, they may say that sounds like a really long time, but I guarantee you, by the time you get into your process, it's
Hmm.
really, really not a long time for, I think, a such a huge purchase, and maybe a purchase that will affect your life. So I think that's a short amount of time to get prepared for to buy something. We have a really great question. I know that this might be a little early right now, but
No,
I got a
that's okay.
question. Someone has a great question, Brother JR, who's part of our family, church family, and related to so many people that we know of. But he has a great question. His question is, what about us veterans that have a VA loan to use? And that's a really great question.
That is a great question. And veterans are my most respected borrowers. I love to work with veterans. So a veteran has and earned the ability to buy a house with zero down, which is
Wow.
fabulous. And technically, a seller could pay all the closing. So you really and truly could buy a home with no money out of your pocket. And
Mhm,
so
mhm,
there are still some caveats for a veteran, like to look at credit and to require a little bit of good credit. But then again, it really doesn't take much. In really 60 to 90 days, if you had no credit, you could establish credit. The
mhm,
other thing about VA loans is this is the only type of loan that works with a different type of qualifying. So, not to go too deep, but so most loans require you to use a particular percentage of your income for the new house payment and a percentage of your income for the new house payment and any debts you have. Well, yes, VA looks at that one ratio of the debts you have and your new house payment, but they also do a residual income. And
mhm,
VA says, okay, if you pay everything out of your pay, federal taxes, state taxes, and then perhaps somebody's active duty and they get non taxable benefits, we don't take the tax out of that. And then we say, all right, you pay all your debts. How much do you have at the end? If at
mhm,
the end you meet their family support residual, and it's by where you are as far as nationally, and it's also by the number of people in your family, if you exceed that by 20%, they don't care what your ratio is. So it is
wow,
amazing. There's some amazing flexibility with VA loans. And really, those benefits. So you should always
mhm.
take advantage of them. So yeah, VA loans are just a fantastic way to get into home ownership.
That's great. That's great. And I think that was a great question because I know we do have several persons who are veterans or who may have
Mhm.
been in the service, and they may be considering purchasing. And I will also say maybe, and maybe this is a good question too. Maybe they have been in the service and now maybe they're downsizing. The question that I have for you is, are they able to use any VA eligibility on a home, on a second home, or I guess moving from another home to purchase? Is that
So there's a couple caveats with that, but I will say, if your VA eligibility, you were used it to buy your primary residence and you wanted to buy like a vacation home, there depending on when you bought it, there may be some additional eligibility that you could use for a lesser down payment. But
okay?
generally speaking, VA is there to provide primary residence for someone. So the most benefit is when you use it. Now, it doesn't mean that you sell your house, your VA eligibility is restored, and you buy the next house, whether it's a downsize or an upsize. Yes,
And
that's a great tool.
yeah, that's great. And again, we may have some who may be watching tonight, or maybe who may watch this in terms of a replay. That information is for you, and we hope that information is helpful as you are making decisions on possibly making a purchase, maybe upgrading or downsizing.
Mhm.
Whatever direction you feel like you're about to make, that is great information, and I think that can be useful in you making a decision. So that's good. I have I think two more questions for you,
Great.
and I'll kind of let you share some other details tonight. So what if a person has what is considered bad credit? I don't know bad credit can, I wouldn't necessarily say it's a bad it's sometimes it's a scarlet letter, or maybe
Mhm.
some people feel like it's a scarlet letter, but it really isn't. And can you explain to us, how a
Yeah,
person can at least position themselves if they have
absolutely.
something called considered bad credit?
Bad credit. Well, the first thing I want to say and really reiterate is you really need to remember my mantra. It is not a matter of if you can purchase your own home, but when. And a credit score that we talk about, as if everyone knows what a credit score is, a credit score doesn't define who you are. It's just a moment in time. It's just a look at your credit that particular time frame. So you'd be amazed what if I have somebody that has a lower credit score and quote they have some bad credit, maybe they have some outstanding charge-offs or collections that they know about but they haven't been able to pay. you
Hmm.
know, if I have software that I can run that says if you're able to get these things paid off within 1 month, your credit score will improve to this, and now you'll be ready to buy.
Hmm.
So it's a great idea to know where you are when you want to start thinking about it. And sometimes I will always give people a plan. And the plan might be for 30 days. It might be for 60 days or 90 days. It might be for some people 2 years because there are derogatory events
Hmm.
that can, have a time frame that has to pass with new credit or reestablished good credit. Things
Hmm.
like bankruptcy or foreclosure, and they have specific time frames. And so but it's okay because if I do this in 2 years, I'll be ready to go. So just because at one point you had credit issues, as I like to say, credit issues. I don't like to say
I
bad
love
credit.
it. I love it.
With some actions, I'll give people homework. This is what you need to do in the next, and we figure out what's their time frame. So it doesn't ever define that you can't be a homeowner. It doesn't define who you are.
Yeah, I love what you said, and I think this hopefully will help individuals who are considering purchasing a home who may not be ready yet. Your credit history is a snapshot of where you currently are, and not necessarily of where you're going now. If you don't do anything about it, then I'm sure
Mhm.
it'll just take a little longer for that snapshot to change into a new scene, if you will. But it's just a snapshot, and it's important. And the other thing I think that you said, it is important for persons to be strategic about where they are and stick to the plan, because I think sticking to the plan that you lay out or present to individuals can be beneficial only if they stick to the plan. Now, I know some people get impatient, and then everyone's timing is a little bit different, and circumstances are different. But I think it's important for people to consider a strategy,
Mhm.
to move from one place or that snapshot to the next scene. So I think that is, I think it should be encouragement to individuals who are considering and thinking about this process. So it's a good
Well, and
thing.
if I could also mention, credit reports are not in real time. So
Mhm,
there is a lag time. Creditors only report to the credit bureaus once every 30 days.
mhm,
So often I get people that call me and say, I just paid off these debts. Go ahead and run my credit again. Tell me where my score is. And we talk about what's the time frame, because they don't record it just because you paid it off. So you have to
mhm,
wait. And every creditor has a different, recording date, or reporting date, I should say. And so, because of that, also, there's a lot of services out there, like Credit Karma, or a lot of people with credit cards. Your credit card will offer that credit reporting service. They'll give you a number. That
mhm,
number doesn't always match the number if we were looking at helping you with a mortgage, because ours is getting all three repositories, and there's only three, is looking at
mhm,
all three repositories, and it's also checking public records. And so the numbers you see don't do those things. So, it's going to pick up any judgments, bankruptcies, that kind of thing. But that just makes ours a little bit different. Like, our number is never going to be exactly the same as the number you see for maybe one of your credit cards. It'll be in the ballpark, but just, because of the time frame and depending on what day you see it, it's important just to know that they're not in real time. It's not like a live moving number. It's,
okay.
each one can vary pretty dramatically.
Okay. Wow. Those are great tips from a mortgage professional who has been in the business for a number of years. I won't repeat the
Yeah.
number that you said, but a number of years, and that is great information. So what is some of the information that you want to share with us tonight? I know we have a slight
So,
pre.
well, I love this format versus slides and just
Okay,
reading
that's
slides.
great.
So I kind
Let's
of
go
love
with
this if this is okay. I'm
it.
much happier with this. So, one of the things I want to say is really, again, reiterating that it's really, I want to share the knowledge with you of what you have to do to purchase your first home. And it might take us a minute to do that, but
Mhm,
don't be afraid to call and say, okay, I want you to look at my credit report. Show me where I am, and let's come up with a plan. Because the other part is, I don't want someone to do the wrong things and think they have to go open a bunch of new accounts or
right.
pay off things that don't matter. So it's really, really important from that standpoint, is
Mhm,
just taking away the fear, and knowing that, I'm there to provide a service to you, to
mhm,
help you purchase your first home. You don't owe anything when we look at your credit or run qualifying and figure out what you can pay. But also, it's important to look inside yourself and figure out, okay, if I can't pay my rent right now, or I'm struggling to pay my rent, maybe now's not the right time for you. And as
mhm,
we did mention about interest rates, the best time to buy a house is when it's right for you. It's like, the interest rates are going to be, there's something that we can't control.
right.
So, you're not going to be married to that interest rate for the rest of your life, but that property is going to appreciate as soon as you start getting into it. And we're in an incredible part of the country where we really, I had a slide that an economist that we follow showed, that basically had only 2 years did we see maybe 0 to 2% appreciation. But in the last 50 years, we've always seen real estate appreciate. So,
Mhm,
I mean, how could you do something so good for your family, but to purchase a house?
mhm,
So, I think it's just important to realize, it's not a one and done phone call sometimes, but
Right.
make the phone call and get started and kind of say, okay, what can I afford? If
Hmm.
you're paying $1,700 a month in rent now and you want to keep your payment, you can get into something for that amount.
Hmm.
So I think that it's just a matter of, finding out the information, sharing knowledge, a lender sharing the knowledge, which is what this is kind of about,
Hmm.
is getting that and identifying, okay, I really do want to buy a house. When that becomes your focus, and then that's the best time to get qualified,
Hmm.
is to figure out, okay, don't start looking at houses first. I know
Right.
that's what we like to do.
Yeah, that's the thing that a lot of people like to do. And, I've been in the business personally for a long time. And, you get the people who they want to buy, uh, not necessarily knowing where to start, but they'll send you a whole bunch of houses. So
Right.
I think, as you just said, it's so important to get an idea of what you are financially able
Hmm.
to purchase, considering your credit, your income, and all those things of nature, and the location,
Right.
and all those factors, I think, will impact what you just said. So we have another great question
Yeah. Great.
tonight, and this is a good one, and you can answer this. So the question is: so things that may be on your credit that should not be there or should have fallen off. Do you have a system in place to help with that while getting ready for purchase of a home?
So it's interesting. I know that there's services out there that are credit repair. What exactly that means, I'm not positive, but I can tell you that things don't necessarily just fall off. Like
Mm,
a creditor can uh, reestablish that outstanding debt sort of as long as they want to, if it's a collection, a charge off. So there's not like a solid rule that things just fall off, other than, yes, a bankruptcy or a judgment. But again, a creditor could reestablish those debts. And so that's the important thing, that there's not like an automatic fall off
mm,
on collections kind of thing. Like,
okay.
people, now the creditor might get tired of reporting it, and that could fall off, but
Mhm.
it's not a definite.
Okay. Okay. That's a great response. That's a great response. I had another question, but it just oozed out. Oh, I know what it was. What about if a person who is they're looking for a mortgage, and maybe they've talked to a few? How does inquiries
Mhm.
affect a person qualifying for a mortgage? How does that work?
So sometimes it really depends on what the inquiries are. So, for example, if I am ready to buy my house and I want to shop with three different lenders and I allow them all to pull my credit, those actually will count only as one inquiry, as long as they're done in a 30-day period, because they were all shopping for a mortgage. As
Wow.
opposed to, I pull your credit and I see Chase and Citi and Navy Federal, and they're all credit cards
Hmm.
that, and maybe some of them you opened, maybe some of them you didn't get open, but so that's telling me someone wants to increase their credit. And so that can, I mean, I've seen credit reports with 20 inquiries, and they're all different credit cards trying to open. And that's not necessarily a great thing. But again, if you were just starting out and establishing credit, you are going to have a couple inquiries.
Hmm. Okay. Okay.
So yes, it can affect your score, but usually it's very minimal, unless it's multiple credit cards and you open multiple credit cards, then really that's going to affect your score.
Okay. Okay. Great. 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 Wow. That's great to know, because again, some people don't necessarily know the impact of uh, mortgage inquiries, and which you
Hmm.
just, I think, gave us was some very good information as relates to if you're shopping for mortgage, and if you have more than, let's just say, more than one mortgage, or
It's
more than one
right.
inquiry that is specific to mortgage lending, then only within 30 days.
Right. It's not gonna affect your score. And because the tough thing is for most all of the lenders out there, you have to kind of know the score in order to price the loan. And
Gotcha.
that's kind of changed over the years. It wasn't
Mhm.
always like that, but it is. And so if your score, and let's just talk for a minute about where scores range.
Mhm.
Scores range as low in the 400s to 900.
Mhm.
So a minimal good credit score would be considered 620 for
Okay.
home financing. A great credit score would be over 750.
Okay.
So, and then the next factor would be, the amount of down payment, the income, and your ratios. But those credit scores, if you just think of 620, is kind of a magic number.
Okay.
Are there companies out there that go down to 580? Absolutely. I had that myself a couple
Okay.
years ago.
Mhm.
And so those scores can fluctuate on programs. For instance, the state of Maryland program for down payment assistance has a 640 score,
Wow.
but they have a program that pays off your student loans that's 700.
Mm.
So
Wow.
the scores and the programs range quite a bit.
Hmm. That is very good information. I have another great question tonight
Mhm.
from another individual, one of our members actually. And her question is, if a person has a high credit score, will that equate to a lower interest rate?
Yes, absolutely. Your
Hmm.
score does help your interest rate. It really does. And sometimes in today's world, what that means is there was a time, and I know you, Bishop, you remember this too, where people didn't have to pay points, but then they did.
Right.
So that goes in and out based on the market. And people might say, well, what is a point? So a point is a fee to get a particular interest rate.
Mhm.
So 1 point is 1% of your loan amount. So if you're borrowing $300,000, that's $3,000.
Mhm.
So when we talk about a lower rate, it might mean lesser points, a rate with lesser points,
Okay.
or it might be truly a lower interest rate. So there's two ways to kind of look at it. What is the cost of the rate? There was a time when we only ever quoted 0 points. But in today's world, it is a little bit trickier. And now most conventional loans may have a point or more on them.
Okay. Okay. What about a person who's thinking about this again? Just as a hypothetical, they're first
Mhm.
time home buyer, and let's say they have a 580 score, and again, that's just a hypothetical, and they're qualifying based on their credit and their income as a first time home buyer.
Mhm.
Their their range, I'm sorry, their mortgage interest rate would be based on what?
So the rate really is based on the credit score
Hmm.
and the percentage of down payment,
Okay.
as well as their debt to income ratio.
Ah,
It's
okay.
really those three things, which is why when we first started, remember we talked about credit score, income, debts, assets.
Mhm, mhm. Okay, okay. Great, great. Got another great question.
Excellent.
Let's see. Do lenders look at the fact, for instance, if you're paying $1,800 a month in rent and never late, do they take that into consideration? And the question is, I'm looking now as if I'm paying so much in rent, why can't I pay it towards something I can own?
Absolutely. And you should look at purchasing if you're paying $1,800 a month in rent. Absolutely. And one of the things we looked at is called payment shock.
Mhm.
So if you're now paying 1,800 and your new payment's going to be 1,900, you have no payment shock versus somebody who was perhaps living with family paying $300 a month and now going to that $1,900 payment. That is a lot of payment shock. So no, that makes a huge difference. Fortunately or unfortunately, you do still have to have those other credentials, meaning the credit score, and the income, meaning the debt ratio. So we're still looking at all those things. But absolutely, if you're paying $1,800 a month, you should look at getting qualified and saying, okay. And I tell people that, like, seriously, there's so much free money out there. Some of it, you don't have to be a first-time home buyer. Maybe you had a house with a previous spouse or a previous situation, and maybe you lost it, but it's been years. And so there's a lot of programs out there that you don't have to be a first-time home buyer. You might sort of feel like it again because it's been that many years, but there's so much down payment assistance money out there to help people, both in Maryland, Virginia, DC. I mean, there's a lot. You would be surprised. It's just people don't know about it.
And that is one of the reasons why persons can contact you for information as relates to what they may fit in, because here is the important thing that I just want to put out there. You don't know what you qualify for, and you can't compare what you qualify for against what someone else may. Everyone's situation is different, and it's important to talk to a professional who can at least point you in the right direction and give you a plan of action and some strategy to do that. We got another great question.
Wait, can I add on to what you just said, though? So that is so important, because the moment you mention to family or friends that you would like to buy a house, everyone gives you their opinion or what they experienced. And the problem with that is guidelines change, sometimes for the better, and some things you don't have to do anymore, and sometimes for the worse. But it's just really important to get the knowledge firsthand from a reputable lender, because it changes. It changes often.
Right. Yeah, that's great. That's great. We actually have two more great questions. This one is so what's the average down payment assistance that can be received for first-time home buyers? Does income play a part?
So that's an excellent question. And there are a lot. I will share one story that I was able to layer 2 down payment assistance programs, and I got a first-time home buyer $32,000 for down payment and closing costs.
Now that's an incredible amount of money.
It is. It's an incredible amount of money. I mean, the state of Maryland, I have a program now with borrowers getting $19,000. So, and the thing is that there's not an average down payment assistance. There are various programs, and some are a flat amount. For instance, we have an in-house grant program that gives $10,000. So the $10,000 is $10,000 no matter what the sales price or loan amount. But the state of Maryland has 11 different down payment assistance programs that vary from $5,000 to 5% of the loan amount.
Wow.
So there's a vast array of programs. And then we have another grant program through FHLB that you can add on top of that. That is either $12,500 or $15,000, depending on what you do for a living. And so the income does play a part. But here's the thing. Each program has a different has a different max income. So for instance, for most of our grant program, it's $183,000. That's a lot of money.
Yeah.
That's a lot of money. And that's the state of Maryland max too. I mean, that is a tremendous amount of money versus some of our other, like the FHLB program is $120,000 in most of our area, which is still a lot of money. So, I mean, but for example, the state has a program that if somebody is at 50% of the area median income, they'll give 6% of the loan amount as down payment. So each program sort of is specific we make sure you have the qualifying income, but you also have the eligible income. And so that can be different, because let's say you worked a lot of overtime this year, but the past 2 years you didn't work a lot of overtime. So for qualifying, I have to average the past 2 years. But for eligibility, the state program, for example, moves your loan forward and says, what's the future if they kept working this amount of income? So sometimes you can not be eligible, but you can be qualified.
Okay. Okay. Wow.
I know that was a lot of information.
So again, there's not I guess a one size fits all scenario. It
Exactly.
varies for individuals. One of the great things that you said was the fact that there's so many different programs out there,
Hmm.
and all it takes is one phone call, an
Exactly.
interaction, an email to say, "Hey, I'm interested," and to get that ball rolling, to get started, to move in that direction. So the good news is there's money out
Yes.
there. There is money out there from, I'm sure, each jurisdiction. Of course, we
Exactly.
sit right in the middle of what we call the DMV, but
Right.
I'm sure there are programs throughout each area that are
Hmm.
specific to those to those states, and it's a matter of contacting someone like yourself to get some answers to maybe some of your questions. So we hope this is helping somebody tonight.
No, I hope it is. I hope it is.
Yeah, yeah, yeah.
Well, and one of the things I also wanted to mention, because I had to do this with my own children, because again, they don't learn this in school,
Right.
is to know your budget. What is a budget? Now, I kind of hate that word budget, but
Most
you
people
do
do.
have to kind of look at that and write it on paper and look at how much you bring home and look at the debts you pay. And keep in mind, some debts you're going to have that you need to pay, but I'm not going to have to count, right?
Right,
Your
right.
utilities, that kind of thing. Or perhaps you send your kids to school and you've got tuition, or some of that doesn't show, but like look at all your expenses and do a little bit of like insight of what am I really comfortable paying, because sometimes I might tell someone they're perfectly qualified and but in reality they're not comfortable. So I always ask two things: what are you comfortable paying per month, and then
Hmm.
I work qualifying. And really, because we have talked a lot about all these different programs, if you think of qualifying like a funnel, all of your information is going at the top where it's all wide. And we throw out a lot of letters: VA, FHA, USDA,
Hmm.
conventional. And then we narrow it down based on income, assets, credit. And then we come up with your best options. And you're always going to have options.
Hmm.
Again, remember, because it is not a matter of if, but a matter of when.
Hmm. Hmm. You said something that's very, I think, pivotal tonight. You always have options.
Mhm.
Now, it's important to keep I think, an open mind as it relates to those options, because you may not like them at the time,
Right.
but it is, I think, important to know and understand that you have options as a buyer, and you don't necessarily have to be a first time buyer. I think, is that what I'm hearing as well?
Yes, absolutely.
Mhm,
Absolutely. There is down payment assistance regardless of whether you're a first time home buyer or not. There are programs available. And
mhm,
so that's a really important thing to remember, because again, people think, oh, it's only for first time home buyers. I owned a house 10 years ago, or
mhm.
so it's important again to make the phone call. Don't be afraid. Get the knowledge.
Right.
That knowledge is power.
Yes. Yeah. Yeah. Absolutely. We have a two-parter.
Excellent.
I think we can get all this in this. Yeah, we'll come back to the second part. But anyway, the question is, are there letters or something that can be sent out to creditors that will help maybe remove things from the credit and put you in a position to purchase a website or template or letters that you can send out to creditors to help you get things off of your credit?
There are, and I know that there are services out there that really promise this type of activity, but I just give a caveat in that, if you truly owe the money, like we're not talking about something that's a mistake or an error, because certainly those can get removed. But if you truly owe the money, there are, laws that if you write X number of letters and they have this
Mhm.
much time and they didn't answer you. But I will warn that that creditor can also put it back on your credit.
Wow.
And
Wow.
so I have seen that where people think it's all clear because they obtained a credit report that didn't have it on it. But remember, that credit report is only one snapshot in time.
Hmm.
So if then you go look at a house and maybe it's 6 months later, something could pop back up on your credit. So there are people that can help you with that, regarding the laws and letters. That's not really something that we do. I run the what if scenario to tell you what your scores could do based on if this was paid off, or and if something is an error, but it would be, you would contact the repositories
Hmm.
to, request documentation. There are templates like that, but that isn't something that your lender would normally do.
Hmm. Hmm. And that's a great question, because a lot of times I think buyers, they expect you, maybe as a mortgage professional or the mortgage lender, to at least do that. But again, that is not necessarily all that you do. You will
Right.
help them or give them information that they can take to move in that direction, to and to clean up specific things, because you're, and I'll say this for you, you're not necessarily a genie.
Right, right, right,
But you, again, you aid people with resources to at least point them in the right direction, and to give them information that they can help themselves to get in a position to
right.
buy. So that was great. That was a great question too. He has a two-parter, and I'll kind of
Yeah.
answer this one. I'll kind of answer this one for. So he has a question about, and this is post purchase. Do you
Oh, okay.
recommend having a home warranty for like appliances, things of that nature? I'll just cut to the chase. Yes. And when you are negotiating with your agent, whomever you select, that is one of the things that you can talk about with your realtor, as far as negotiating that particular item into your offer. And I'm sure as you do that, the seller can either accept that particular item in your offer. And I've been in situations and seen situations where maybe a buyer says, okay, well, if the seller's not going to pay for it, I'm going to pay for it, and I'm going to get that peace of mind. So I would personally say yes, it is worth the
Yeah.
investment. Now, I will also say, now, not all home warranty companies are the same. They have different layers of protection. Just so for your information, do some research on the company that you're considering. And also keep in mind that the lender or the realtor is not necessarily a party to those particular warranties. So you can't hold them responsible, but you can always go to your warranty company, especially if you purchase it. When you're making your purchase and you've settled, you are going directly to that home warranty company to address any issues that you have encountered after you have purchased the home. All right. I think I've answered that question thoroughly. All right. All right. Well, we're coming up just about at the end of our time tonight. And I'm not too sure if there's anything else that you wanted to share that might be helpful to our
Um,
audience tonight.
let's see. Well, we didn't talk about, we've talked a lot about credit, but I did want to mention, let's say we really were trying to establish credit, or I want to improve my credit. And maybe I know I have some late payments, but, um, a lot of people might not know this, and it is hard to do. I understand what I'm saying. But if you said, well, how do I get the sweet spot of making my credit the best it can possibly be? And the sweet spot is keeping your balances at 30% of the credit limit.
Mm,
Now, that doesn't sound like, so if I have a Target card and I have a $500 limit, I can only use it up to $150.
mhm,
But if I use it and I pay on time, it doesn't mean you have to pay the whole thing off. I maintain a balance, because one thing that people don't realize is credit reports use trending data now,
mm,
meaning how do you pay? Do you make the minimum payment? Do you make a little more than the minimum payment? What kind of balance do you carry? So if you could ever maintain a 30%, and here's what happens, your limit is generally increased when you don't need it, which is great. And then you can use a little bit more, trying to always to keep it at 30% of limit. That's the sweet spot, but I know that's hard to do. So what does help your score is not keeping things maxed, like to the limit. Or this is really important. People do not realize that $5 over the credit limit will lower your score quite dramatically sometimes, which sounds crazy, right? You're like, it's only $5. But because you went over the limit, they do the analytics of what that is likely to occur because of. So it's just important to try to stay below the credit limit as much as you can. So, 90% is better than 98%. 80% is better, the best being that 30% limit. So that's just kind of an important thing for you to keep in mind. The other thing that people get scared of, just to veer from credit for a minute, is, but I'm up for a new job. Should I not take it? So absolutely never miss an opportunity for, advancement. And especially if you're in the same field or a similar field, or maybe it's a field you've wanted to get into and it relates to classes you took or an education. We just, like, our job, this is not like buying a car. This is an investing in your future. So we're going to talk to you and say, well, tell me how you got into that field. Oh, you took classes. Oh, you got certifications. We build a history that maybe your previous jobs were unrelated to your new ones. So there's other things that your lender can help you with, and that's building a history, because that's why you got the new job, even though you weren't in a similar line of work for 2 years. But it doesn't mean we expect you to keep the same job.
Okay. Wow. That is also a great nugget to consider. I think, and this is one of the questions I've been pondering. So, say for instance, a person is in the midst of a purchase, and we got another question too. They're in the midst of a purchase, and they decide to go buy a new car. What should happen?
Yes, it does happen.
Well, how would you advise a person?
It does happen, and that is a tough one, because sometimes. So here's the thing. You got your credit where you want it to be. You bought the house. You got that you're under contract. You're 2 days away from settlement, and you buy a new car because your loan's approved, and you thought, great. So we do what we call the 10-day docs, but generally they're done 2 days before settlement. We do what's called a credit refresh, and a credit refresh will show any new inquiries. And if there's a new inquiry, and let's say there's not the debt on there yet, because the car payment's probably not on there, but we're going to ask you, and you would have to say, I bought a new car, in which case we document the payment and have to make sure you qualify with the payment. So that is that is something that, if I have someone that's very tight on qualifying, I will lecture about, do not buy anything new. No new car, don't buy new appliances, don't buy new furniture, wait until you're in the house after settlement, then you can. But so that can be it can be a deal killer, to be honest. I mean, we try to work it out, but sometimes that's a tough one.
Yeah. And I think I can safely add, don't open up any new credit cards.
Yeah, exactly. Right.
That may not be the best course of action that would help you on your journey to purchasing. So
right, absolutely.
Yeah. One more question before we end tonight. And this is I'm not too sure if it's a question you can answer, but I'll try to answer it myself. Another question is it best to purchase a home that is already established, or one that is built from the ground up? Well, I think that is kind of unique to that person's needs, what they qualify for. It's somewhat broad, because some people may want to buy new construction just because they want to buy new construction. Some persons may want to buy something that they want to fix up. I don't know, but I think it comes down to what your need is and what you happen to qualify for. Brother JR, it's really based on your personal profile, because I think, as we said tonight, um, there is no one size fits all.
Right.
Everyone's situation is different. So it really kind of comes down to what your need is, what you're able to qualify for, and then take a hard look at what strategy you use to purchase. So oh, he has one more question. And this is a really good one. It says, I have one more question. If you're no longer working and your only source of income is now disability, can you still qualify for a mortgage?
Yeah, absolutely. We use all other income for qualifying. So Social Security, if someone's on a pension,
Hmm.
I actually am one of the lenders for the Prince George's County Housing Voucher Program.
Hmm.
That's real monthly income. Child support, it's income. So yes, you can use those other options.
Hmm.
Absolutely.
Hmm. Wow. Wow. That's great. That's great. Well, we're about to wrap up tonight, and we want to say, hey, thank you to those who've joined us tonight and have posed so many different questions. And, we hope, pray that this has been informative. It has been helpful in you considering purchasing a home. If you're thinking about it, there is a great time to do it right now. The market is heating up. And the other thing that Jane said tonight is, interest rates will go up and down, but the opportunity to purchase is an ongoing thing. So you always have an opportunity to purchase. I'll say it this way, the interest rates, when they go up, well, when they come down, you can refinance.
Yes, exactly. Yeah.
It's you just have to be strategic, no pun intended, strategic in your moves. Y'all know about that. That's my book. And you have to be strategic and move accordingly. Again, everyone has different needs and different wants, and everyone's makeup is different. So it's important to do what you need to do for yourself and your family. So we want to say thank you to Jane tonight for sharing some information with us. And if someone wants to get in contact with you, how do they get in contact with
How
you?
about if I just say my phone number because it's the easiest thing?
I'm going to put that on the screen as you said. What is
Okay,
that?
it's 301
Uh huh.
440
Uh huh.
2400.
All
It's a
right.
great phone number and I've had it forever.
That is a
Awesome.
great number.
It is a great number. Yeah, exactly.
So
Only everyone calls it thinking it's my office number. So I am somebody who leaves my phone on all night next to my head. So I was like, oh, I might not answer at 2 a.m., but I have people left me messages.
absolutely. So as you see, Facebook and YouTube, her information is on the screen, and her telephone number right there is 301-440-2400. It is a very easy number to
Exactly.
remember. It has a lot of
I've had
forward.
it since I was 12, remember?
That's right. That's right. That's right. So we want to say thank you again, and we will. Matter of fact, that information again will be available, and if you have questions, we have information in our social media, and you can reach out directly to Jane for questions if you have additional questions, and she will be more than happy to answer your questions. I'll also have a link. Do you mind me showing your email?
No, of course not. Yeah, please
Just
do.
in case persons want to
Yep.
reach out, we have that information as well. If you want to take a snapshot of that, there's her
Mhm.
information tonight. You can certainly reach out to her by email and get some more questions answered. Whatever we didn't answer tonight, you can reach out to her, and I'm sure she will be glad to help
Please
you.
do. I'm so glad. Thank you so much for having me. I really loved it. It was just great. And again, I love to share the information, share the power. I think, some of my favorite clients have been first generation home buyers, which is
Mm.
always just a pleasure to show someone who really never thought they could own their own home.
Mhm, mhm. Yeah, and that's the thing. It's as I said, you know, anytime is a great time to consider purchasing a home. And I am a proponent of ownership. And if you're not able to own right now, that's fine. You know, at least start thinking about it, gather some details, gather information so that you can, again, make an informed decision. All right. So, again, thank you so much, Jane.
Oh,
And
thank you so much for having me. I really appreciate it, everyone. Thank you.
we are so appreciative to you sharing this time with us, and Facebook and YouTube. We want to say thank you for logging in tonight. We have some great viewers and some great questions, and we want to say thank you again for tuning in. And if you again have any questions, you see that information on the screen, and you can reach out to Jane, and she will be more than happy to answer questions. All right, everybody. Well, have a great and safe evening, afternoon, and not afternoon, but anyway, rest of the week. Because look, we're in the evening now. The sun is going down. So again, we want to say thank you so much for joining us, and we hope again that this has been good for you and beneficial. So as I often say, shalom, shalom, peace, peace to you, and have a strong week. All right, everybody.